Hey guys, happy Wednesday. So today we're going to talk about Elliot Wave. I really like it because it's interesting to me and I use it as part of my tool set to trade. So what is Elliot Wave? Elliot Wave was founded by a professional accountant named Ralph Nelson Elliott, where he discovered the underlying social principles and analytical tools, and he noticed these patterns in the financial markets. So people they follow his patterns now and they call it Elliot Wave. And according to him, there's always patterns of directional movement which are repetitive in form but not necessarily repetitive in time. So this is the basic pattern. Alright, usually the three waves are 1, 3, and 5 are the odd numbers. They're the directional movement of the market. Usually it's uptrending. And then the counter trends are waves 2 and 4, the even numbers. These are called corrective waves. So 2 and 4 are corrective waves. 1, 3, and 5 are impulse waves. So let's start drawing that now, just so you get a better idea. So here we go. And then I put down the rules for you to help you guys out. So wave 2s often retrace 61.8% of wave 1. So if you grab your fib, you draw from the bottom to the top of wave 1. Wave 2s usually land around here. We call this the golden zone. The golden zone is anywhere between the 0.5 or the 50% to 61.8%. It can go as deep as 78.6. It can go as deep as 88.6%. But usually the algos are programmed to buy around here. Oops. Wave 3s are usually 161.8% of wave 1. So what does that look like? Looks like this. And it's usually the most violent and the most impulsive. The algos are usually programmed to take profit around this area, the 123.6%. But they can usually wave 3s are around here. Okay. And then wave 4s usually retrace 23.6% to 30.2% of wave 3. This is usually the profit taking level for algos. So like this, you kind of see like declining volume, and then this will kind of look like a bull flag or a triangle, which I put right here too. Wave 4s usually look like triangles or bull flags, so it can look like a bull pennant. So it can look like that. Geez, I don't know why I'm using a damn brush, but where's my trend line? It can look like that. And then they break up. Wave 5s are usually the same length as wave 1. So if this is a $100 move from the bottom of wave 4, this is usually a $100 move too. In the rare case, it's not longer than wave 1. You call that a truncated wave. So it can look like that. That's called a truncated wave. But we'll just stick to wave 5 being a 1-to-1 extension. Whenever anyone says a 1-to-1, this basically means like the wavelength is the same as the other wave they're referencing to. Alright, let's talk about the structure. So impulse waves are always 5 waves, right? So wave 1, 1, 2, 3, 4, 5. Let's make this a bigger degree. There you go. So this is 1, 2, 3, 4, 5. That completes a 1. And then wave 2 would be almost always, or it would always be a 3-wave move down. Dang. There you go. Alright, then wave 3s can be face rippers. Looks like that. Wave 4s can be triangles. Like I said before, it can look like this. And wave 5 is the same thing, 5-way impulse. And then once you finish that, this whole thing is a larger 1. And then you come down for a 2. And it just repeats. So here are the cardinal rules. Wave 2 can never retrace more than the length of wave 1. So it can never, like, this can't go like that. Okay, it can't do that. Wave 3 cannot be the shortest of the 3 impulse waves. So 3, let me do this. So it can't be like, let's say wave 1's a $100 move. Oops. So it can't look like this. That would just look kind of weird. Wave 3 can't be the shortest. It has to be, it just can't be the shortest of wave 1, 3, and 5. It has to be, it's usually the longest. And then wave 4 does not overlap wave 1. So wave 4 can't be like this. Cannot overlap, or is invalidated. So whenever I say it's invalidated, it's because wave 4 is entering wave 1 territory. Like that. The only time it can overlap is when it's in a leading or ending diagonal. And what I mean by that is a rising. Those are usually known as rising or falling wedges. So, for example, let's say we're working on this wave 5, right? And then it's kind of looking like a rising wedge. Does that look like a rising wedge? Yeah. For the sake of argument, just that looks like a rising wedge. Maybe like this. Just bear with me. All right, so it'll be like that, right? It'll come down. So it can intersect with wave 1 right here. And then once you finish a rising wedge, that's usually the top. And then you usually just, where the heck? Usually come down for the correction. So that's called an ending diagonal. And then a leading diagonal is also like this. So this can be a leading diagonal. Like that. That's a leading diagonal for a wave 1. So that's the only time wave 4 can come in, intersect with wave 1. That was a very poor drawing, but you get the gist. Also to note, wave 2s can never be triangles. So just remember that. So that's the basic premise of Elliot Wave. And let's use that on a ETH. Okay. So here you can tell this is correction. So 3-wave move. A, B, C. And how do you know that? Well, because you can count 3 subwaves. A, B, C for the large degree A. Oh, is that the wrong one? Damn it. Looks like that. And B, you count 3 waves up. A, B, C. And then C waves can be impulsive, so they can be either 3 or 5 waves down. So 1, 2, 3, 4, 5 for the ending C wave. Right, that's your correction. And then you can also call that, you can also look at it as a falling wedge. This is what I mean. So that's an ending diagonal. So let's draw it again. 1, 2, 3, 4, 5. So yeah, that's the only time wave 4 can come in with wave 1, and then we break out. So the most powerful thing we want to identify, they call it a 1-2. What that means is you want to find the 1-2. So you want to find a wave 1 and 2, right? It's right here. This is what we want to identify. So we can ride the wave 3 up. And then how do you identify that? Well, we don't really care about wave 1 because that's gonna be really rare to get. We want to get in this golden zone. So you want to get right here, 61.8%. This is where you start loading up. Okay, you want to start loading up here, and then ride this impulse up, and then, like I said before, usually it's 161.8%, but bots probably take 123.6%. They take profits right there. So once they start taking profits, kind of looks bull flaggy. This one doesn't look bull flaggy, but it's in a channel. Okay, that's ABC down for wave 4. Wave 5 looks short, so you call that truncated. Wave 5 is usually the same length as wave 1, but in this case it's not. Alright, and then so that once you do that, now it's a large degree 1. Now we're waiting for the large degree 2 to finish. So where can we expect that? Right now it's already in the golden zone, so it's not bad. It's not bad to start laddering entries here. This is not financial advice. It's just like educational purpose. I'm just looking at it, but it can come as low as here, and then it's not bad for a bounce. It should bounce. Yeah, and then you can combine it if your RSI. It's getting oversold right now, and then you can count this. Let's try to count and see how many waves are in. A, B, C, A, A, B, C, B. Now we're working on our C wave. C wave is gonna be 3 or 5 waves down. So looks like 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, so it could be in. Could be in. That's how you want to write it. And then you also want to combine this with like regular chart patterns. So I did before in the last video, so you can clearly see. This is for now. Just delete this. So if you can see, this is a head and shoulders pattern. Shoulder, head, shoulder, and then this is the neckline. Alright. So head and shoulders usually means it's a topping signal, and then a correction is coming. So you retest the neckline and then drop. Okay. That's the same. The same is true for inverted head and shoulders, which is right here. You can call this inverted head and shoulders. Shoulder, head, shoulder, head, shoulder, neckline. So you see, came down, retested the neckline, then went up. So you can use all those kinds of things in as confluence with your analysis. And that's just a really basic video on Elliot Wave and how I use it in my TA. Hope that was helpful. Hopefully this video wasn't too long. But anyways, y'all, safe trading. Take it easy.